Hello, traders. It's 8:01 a.m. Chicago time on what are we? Wednesday, the 16th of December, 2020. Thanks for joining me today on the 1900th episode. Wow, right? 1900 episodes today. Thanks for listening in and thanks for being a part of the conversation. It's been very consistent over the last, whatever it is, 7 years or 5 years. I think it's 7 years that I've been doing this. I really, really hope that I've made an impact on your trading, hopefully your life in general. At least I've helped push you along in the direction you want to travel. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the summary sheet, the CT or convergent trading summary sheet, we have a risk on market. The market's leaning bullish today. We're seeing flows into the DAX as the leader today on the index side, followed by the Euro Stoxx 50. The Russell is relatively strong today. The other indices are mildly bullish, but the ES has had about a 10-point pullback from the high. It has breached 3,700 again and was within a couple of ticks of the all-time high, daytime high of 3702. I think it's 3702 and a quarter, something like that, or 3702.50. But we're within some change to the all-time high. This was expected. I did post about it in the Head Trader channel yesterday on CT. At the close, I stated, well, actually not at the close, but it was at the close. I stated as long as we remain, this was at 1:45 Central, 2:45 Eastern. I said so long as we remain above 72, it is longs only. Again, keep an eye out for 91.50. This is a reversal of yesterday's trend down. Is playing out scenario one. And then at 3:30 Central, 15 minutes after the pit close, I wrote ES very likely to crawl up overnight and run stops above 91.50 now. Wanted to caution shorts there. We held one Vola Sigma up, volatility Sigma up yesterday into the close, and we pushed exactly into the point of control that I discussed at length yesterday at 36.85. It's really 36.85.75, which was last week's point of control. I expect it to crawl up into 91.50 in extended trading hours. Hasn't done so yet. It has retained the one-time framing on a daily. That's key to my bullish view since this morning. Scenario one played out very well. Can't say I traded it spectacularly. That's just the truth. And we did crawl up there. The overnight inventory at this, the overnight volume at this moment, it's 152,000. We've had about 21.75 points of range so far. Up to 50 points in the overnight session is considered inside of one sigma, or what is normal, statistically defined as normal. And so we're in line here. I don't know that we'll see 50 points overnight unless there's big news here. I expect that we'll do the creepy crawlies into January, as we often do. The overnight inventory is at 58.25% long. We have a very clear double distribution profile, a lot of really nice structural cover in a minute, and I think there's a high probability of decent opportunities today. Remember your rotations for today, and remember that we have the FOMC today. We do have some numbers, market PMI at 9:45 Eastern, business inventories at 10, housing market index at 10, crude oil inventories at 10:30, and then the Fed rate decision at 2 p.m. with the conference at 2:30. And so that's where we stand coming into today's session. That's a very succinct summary of where we have been in the overnight session and what to look out for today. I'm hoping that everybody here is doing this sort of prep in addition to creating their pre-market plan before coming into trading. Let's take a look at the review segment. Excuse me one second. The review, yesterday's primary scenario basically boiled down to a very likely, because the inventory was relatively high on the long side, the expectation is for a pullback down into the 58 area. I did talk about the fact that the full session mid and full session VWAP are right here in the 52 to 55, and I talked about how it could pull back as far as that, and I'd still remain bullish on the structured long for scenario one. Scenario one was looking for 58 up here, and that's where we topped out. That's where I expected us to top out, in the 58 area. In the 58 area, I expected us to retest, and I also drew this little dash here saying that if the 58 consolidates early or gets there early, then we're likely to push through and squeeze into push through the 9150 and squeeze into 3700. Yesterday did what it was expected to do on the dot. Pulled back, turned around, and pushed to that 58, 36.85, 75 area. Here's yesterday's trading on a 6-tick Renko. An open auction in range of the prior session, so expect a fairly choppy trade. Did not participate much into did not see like clear participation, although it held the mid a couple of times. Did not see clear participation on the short side. Saw the long though. I believe there's a scalp long setup down here at 54, maybe. I don't remember. Back into the 61 area. And back into the mid, talked about that, and it ended up pushing for a lower low before we squeezed higher. Look at where it went, 52 and a quarter, right up against that full session mid, right underneath the full session VWAP before the turn. This was a kind of a nicely telegraphed rotation. If you didn't catch it on the way up, once it breached the mid, now we're looking long and we're looking for a pullback, and it pulled back to about the zipper rest area before the after the first push, and then that set us up for a neutral day up and a push to where, remember, the target up here was 85.75, right in this zone here, 85.75, and then from there the afterburners were turned off, and this thing just glided into the close. We ended up with a double distribution profile yesterday, with the point of control holding at the lower end of the range. This is what we created a structure, and we ended up with an inside day. This is the prior session high, the dark green, the prior session low, the dark green. We did not test the prior close. We put in a higher low. And of course, we can't pay attention to the delta just yet, although today, the day is starting to today, with the rollover being about 96% complete or so, I'm expecting the delta to come back as something to lean on. So again, I did not trade this well at all. To be honest with you, there's just too much going on, and I'm allowing external things to kind of get in the way. But in my opinion, and I know many people here probably lost money yesterday, and this is not a shot against you. The structure is very well organized. The auction is very well organized here, and it continues to be in the overnight session. So if we look at the overnight session, slide up. Here's the overnight session. Remember the dark gray band and the blue profile are RTH pit session. That's 9:30 to 4:15, and then anything outside of that is extended trading hours, including the 2 half-hour bars. This is a 30-minute chart. The 2 half-hour bars or so that sit, one of them is 15 minutes long, the other's 30 minutes long, that take us into the end of the official end of the session at 5 p.m. Eastern. The new session begins right here. We have a session open, and immediately it is higher as expected, pulls right back, is unable to take the swing low of the close, and so it sits sideways through the Asian session, and then the Europeans come in right here and start squeezing higher. We end up with a double distribution profile poking through that 9150 area. Very important top right there, pokes through the 9150 area, and I'll show you what that looked like in the order flow. But a nice spurt, and then we end up pushing into the century figure 3700. Remember, we're going into expiration this week, so these major strike prices are going to have a lot of liquidity, and there's going to be a lot of hedging at those prices. So you want to pay attention to the century, mid-century figures, especially during. We pay attention to them throughout time, but coming into expiration, these become key figures because there are those who have sold calls, above 3,700 and need to hedge those positions. Excuse me one second. Need to hedge those positions, those options, and what you have is delta and Vega hedging using futures, and that's what causes, in addition to the roll, it causes a lot of volume and a lot of kind of weird behavior this week, which thankfully is almost over. We've pulled back. Where did we pull back? We pulled right back to the prior session high right here, almost to the tick. We pulled back to 36.8875. The high yesterday is 36.8850. Pulls right back, is tangled right now in the full session VWAP and mid. We are below the overnight point of control, and so we're in an area where both sides are likely to start positioning to either push lower and back into the range and get us below this low volume node into the lower distribution, in which case we would be looking for a target at 36.85 to 36.85.75 from yesterday, the prior day's close, plus that weekly point of control, volume point of control. That would be the target to the short side. Not very far from here. It's about 5 points. Or this area is protected and defended. We end up with a higher low, and we start to then target 96, which gives us about, again, another 5 points to the upside. There's the market's out of balance a little bit, has been balancing overnight in this higher distribution. You can see the delta has come back somewhat and is following price, and so I'm interested in how it plays out today. Let me show you. This is what I warned CT's traders about last night. Those, especially the shorts. This is the kind of behavior we expect. Here's a beautiful scalp long on the order flow. Look at this thing, just pushing back up and through the prior high, which is down here, 88.50. So it squeezes through the high, has a small spurt up, small push up, and then we see it pull back. Unable, see those prints, unable to push lower, and so it's time for a squeeze, and it squeezes higher and through 91.50, pulls back to where? Pulls back to the 91.50 area and holds steady here. And look at this nice little zipper forming. This is last ditch protection. Look at the volume and how it's distributed below there. As soon as this breaks, this is likely to trigger off stops, and it did. And then from there, it held pretty well. This is a nice push into the 3700. If it was missed down here, we have a nice order flow long building here with the tight zipper that is not able to push back, and so those the participation these participants here, the volume here, then has to cover, and it continues higher. And you can see as it continued higher, it kept pushing right up with no pullbacks. This is a nice little scalp long. Of course, I was sound asleep at this point. And then you have this liquidity at the 3700, which has been there a long time. 3700, and of course that gets busted. As it breaks higher later in the session. You can see there's a nice collision here. This volume actually traded out, consolidates here, has a hard time pushing through, and then it starts to get weaker and weaker as we wait. So here's a stop run above 3,700. Quick stop run, lots of activity, and then fizzles out, comes back below 3,700, and the liquidity steps right back in this region again. More delta hedging as it falls back through, and this liquidity is likely to stay intact and stay here for the session. So you can see that liquidity up there at 3,700 will remain intact for the rest of the session and will likely trade out again. Really beautiful stuff here. It's kind of like trading chart porn, as they call it. So let's go back and look at what's expected for today. I know I'm talking a lot, but I talk a lot during times when we have nice structure like this because it gives an opportunity to see the market auction the way it's expected to. And we see some clarity in how things are playing out. So here it is. Let's take a look at what's expected for today. Before I hop into that, a quick announcement. We want to let everybody know that on Wednesday next week, the eve of Christmas Eve, that's probably what we should have called it, at 6 p.m. Eastern, we're going to have a fireside chat with the head traders from Convergent Trading, a panel of traders, professional traders, and it's an opportunity. It's a very chill, grab your favorite drink and come along. It's a very chill conversation. Very chill conversation with these head traders, all professionals. We will discuss trading. We'll discuss our experience, and anybody and everybody can ask questions. You can join this by going to the number 2 ct.pro/CT Fireside 2020. These are fun to do. They're informal. Lots of stories and history and a part of the journey. Of course, this is going to be recorded, but I would suggest you register so that you can be notified and sent the recording once the session is done. We do not spam anybody if you do register, but I would suggest you come along. There will be a pretty decent discussion. Heck, if we could do this live, there will be drinks served as well, but that's not a luxury we currently have. So please join us at go to ct.pro/CT Fireside 2020. You'll see this on my feed at some point. We'll be talking about it over the next few days. Here's what's expected for today. The key trade ideas for today. This thing is really battling it out here near yesterday's high, with the inventory being about 50-50, being 50% above the close. The expectation is we are likely to fall back into the prior day's range. We do have a small gap zone here, but I'm not expecting it to last. I'm looking for it to push through to the 85.75, consolidate, and potentially dip a little lower. Remember, we've accomplished another test of 3,700, and I'm expecting this to pull back, consolidate in the upper distribution. As long as we do not breach this 3677 area, which was the low of the prior session, of Monday's session in the morning, As long as we don't breach this area, I'm looking for it to come back to the overnight point of control and re-challenge the 3,700 and the high. We have FOMC at some point today. Nothing, they're in a pickle here between the vaccine coming out and monetary policy. They're in a bit of a pickle as to what they'll say. I expect it to be a very muted meeting, but I'm expecting this to make its way back up to 3,700 at some point today after the meeting. So that's the primary scenario. The secondary is an open auction that sits at the on top of the range, comes back to the overnight point of control, consolidates up here, and then starts to squeeze into the 3,700 before the FOMC, comes back in and just holds steady in the upper distribution before we get to the FOMC, and from there, who knows? That's scenario two. Really a market that takes a position early and then consolidates into the FOMC and waits for what it's likely to do before the next move, and then it's anybody's guess once that happens. These are the two key ideas. I am expecting this to drop in the morning. I would look for the short side to be a scalpish and the structure trade to be on the long side. I'm not trying to set your mind in any way, but this is how things are shaping up. Okay? It's a lot of talking. Good luck. The market opens in 8 minutes. Watch your risk. Don't be a gambler, and so that you can be here tomorrow. Good luck. And don't forget to sign up for next week's webinar on Wednesday at 6 p.m. for the fireside chat. Take care.